Hello, and welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, September 11th, 2025, we're putting the spotlight on a stock that always generates significant discussion, Tesla, symbol Tesla. The broader market has been a roller coaster, with the Dow, S&P 500, and Nasdaq hitting fresh record highs, largely influenced by the Federal Reserve's dovish stance and expectations of rate cuts. This sentiment comes despite a cooling job market, with a significant jobs report miss in August, adding only 22,000 jobs and sparking talk of a dovish Fed rate cut. Mixed inflation signals, however, still complicate the Fed's path, with consumer inflation ticking higher in August, while wholesale inflation unexpectedly cooled. Against this backdrop, Tesla has seen some dramatic movements and contradictory headlines, with Google showing a current price of $368.81, representing a substantial gain of over 6% today alone. A major point of recent news, according to Benzinga, is Elon Musk's bold prediction that Tesla's Optimus humanoid robot could account for over 80% of the company's value someday. This has shifted investor focus from the electric vehicle market towards the potentially massive robotics and AI sectors. Complementing this, a new pay plan for Musk, contingent on ambitious operational goals and a staggering $7.5 trillion market cap target, has investors buying in, with some analysts seeing a potential stock price of $2,675 per share if all milestones are met. These long-term aspirational targets are clearly providing a strong bullish undercurrent for the stock, overriding some near-term concerns. Additionally, MarketWatch recently reported strong demand for the new six-seater Model Y in China, with October stock already sold out, indicating robust demand for specific models. This provides a short-term catalyst, even as other reports like Business Insider noted Tesla's U.S. EV market share falling to 38%, its lowest since 2017, due to increased competition and a lack of affordable options. Furthermore, Tesla's Q2 earnings showed a revenue of $22.5 billion, the steepest decrease in a decade, and missed EPS estimates, attributing this to an uncertain macroeconomic environment and shifting tariffs. Now, let's turn our attention to the charts to see how these events are reflected in TSLA's price action. On the daily chart, looking back from April 2024 to today, we observe significant volatility, but also a clear, albeit jagged, uptrend from lows around the $180 mark in May 2024. The stock made a strong rally into December 2024, peaking near its 52-week high of $488.54, which remains a key resistance level. Following this peak, we saw a notable correction, with prices finding strong support around the $280 to $290 range in late February and early March 2025, marked by high-volume capitulation candles. This $280 to $290 zone has acted as a significant psychological and technical support level, preventing deeper declines. From there, Tesla began to consolidate, forming a base before its more recent ascent. Now, let's look at the 1-hour chart, especially from early August up to the latest available data on August 29, 2025. We can see that Tesla had been consolidating in a range, with initial support around $330 to $335 and resistance around $345 to $350. The daily chart showed a close of $347.79 yesterday, September 10th, and Google is reporting a current price of $368.81 today, September 11th. This indicates a significant bullish gap up for today, which would be visible if we had real-time intraday data for today's session on this chart. Based on the historical price action up to August 29th, the stock was trading around the $335 to $340 range, trying to push higher. The strong market sentiment and positive news, like the Optimus robot and Model Y demand, are likely contributing to this reported rally beyond the charts we're currently viewing. Shifting our view to the 15-minute chart, we can examine the price action in finer detail, focusing on September 8th to the close of September 10th, 2025. Leading up to yesterday's close, the 15-minute candles show a relatively tight consolidation around the $345 to $348 range. There wasn't a clear breakout on the 10th itself within this time frame, with volume remaining consistent rather than spiking. This suggests that the significant jump to $368.81 reported by Google for today is likely a result of overnight or pre-market news-driven activity, forming a substantial bullish gap. The CNBC and Investors.com reports, suggesting Tesla was on the verge of another breakout, seem to have materialized into this gap. For traders looking at immediate levels, the $345 to $348 zone, which marked consolidation yesterday, will now act as a critical support if the stock pulls back from its current higher levels. Its ability to hold above this area, combined with the new $368.81 level, will be telling for short-term sentiment. The volume on these 15-minute candles, while not showing a massive surge yesterday, indicates sustained trading interest even in consolidation. This significant overnight gap, which is not depicted in the historical candlestick data here, represents a powerful move that short-term traders will be closely watching for confirmation or reversal in the live market. Let's consider the long-term outlook. The bullish case for Tesla is strongly supported by the shifting narrative towards AI and robotics, spearheaded by Optimus. If Tesla successfully executes on its robotaxi and humanoid robot initiatives, the stock could indeed reach the highly ambitious targets outlined in Elon Musk's compensation package, potentially seeing $2,675 per share. The strong demand for new vehicle models like the Model Y in China indicates that despite overall market share challenges, Tesla still has strong product appeal and growth vectors in specific segments. Furthermore, a generally bullish broader market, bolstered by expected Fed rate cuts, provides a favorable environment for growth stocks like Tesla. However, the bearish arguments cannot be ignored. The declining U.S. EV market share, coupled with intense competition and price cuts in key markets like China, highlights significant operational headwinds for Tesla's core automotive business. Legal risks such as the Florida crash judgment and the FSD class action lawsuit could also weigh on investor sentiment and financial performance. UBS's sell rating and $215 price target underscore the view that the current valuation might be unsustainable given the challenges and a Q2 earnings miss. A reversal could occur if the market perceives a slowdown in AI/robotics development, if the robotaxi rollout faces significant regulatory hurdles, or if further negative economic data dampens consumer spending on EVs. Considering both the news and the available chart data for short-term trading, we would now be closely monitoring the new price level around $368.81 as a fresh support point, assuming it holds. Immediate resistance could be found around $370 to $375, and if that breaks decisively, the path towards $380 to $385 opens up, with the ultimate goal for bulls being the previous all-time high of $488.54. On the downside, a crucial support zone is the $345 to $348 area, representing yesterday's closing levels and a key retest zone if today's momentum fades. For medium-term traders, the $330 level, which has served as a recent significant support on the daily chart, could be a more robust fallback if a larger pullback occurs. Volume analysis remains key. Sustained high volume on upward moves reinforces bullishness, while high volume on downward moves indicates selling pressure. Keep a vigilant eye on upcoming company announcements, particularly regarding robotaxi testing or Optimus robot developments, as these could act as powerful catalysts. Also, watch for the next inflation data and Federal Reserve announcements, as these will continue to shape the broader market sentiment and could quickly change the narrative. Any significant news regarding the ongoing legal cases or an update on Tesla's Model Y demand in other regions will also be critical factors impacting future price movements. These combined factors, both fundamental and technical, will determine if this reported breakout can sustain its momentum. To recap, Tesla is currently experiencing strong bullish momentum, pushing towards the $370 to $375 resistance zone. Breaking this level would make a run to $400 and eventually the all-time high of $488.54, more likely. Perhaps with a 60% probability if the AI/robotics narrative continues to build and broader market conditions remain favorable. However, failure to hold above $345 to $348 could lead to a retest of the $330 support, with a 40% probability if EV market challenges intensify or if there's unexpected negative company news. The ultimate long-term bullish scenario of $2,675 relies heavily on Musk's audacious vision for Optimus and robotaxi becoming a reality, which remains a high-risk, high-reward bet. Always remember to conduct your own due diligence and consider multiple factors before making any trading decisions. Thank you for watching Explain the Charts, and we'll see you in the next one.